$2. We are back at the exact price where Polkadot launched on Binance years ago. If you look at the sentiment on social media, this chain is dead. Retail has capitulated. But if you look at what the largest asset managers in the world are doing, the story changes completely. While everyone is panic selling their bags, Vanguard, managing $11 trillion, just listed a fund that gives investors direct exposure to DOT. I'm looking at a fractal on the 2-week chart that looks identical to October 2023, right before we rallied 200%. We are sitting at the most critical support level in the history of this asset. Today, I'm showing you why this is either the trade of the decade or the final warning before a breakdown. Let's be honest with each other right now. Holding Polkadot has been painful. I know many of you have been dollar cost averaging into this, and seeing the price hovering around $2 feels like a punch in the gut. The market sentiment is atrocious. The narrative right now is that Solana and Ethereum have won, and everything else is a ghost chain. Price action has been bleeding out for months, completely ignoring the broader market moves. We are sitting at all-time lows, fighting to hold the $2 psychological support. But here's the thing about extreme fear. It usually marks the point of maximum financial opportunity, provided the project isn't actually dying. And that is why we need to separate the price from the value. Because while the price is saying sell, the fundamental data is telling something very different. Let's look at what's actually happening behind the scenes, because the disconnect between development and price is wider than I have ever seen. First, the institutional validation. Vanguard, which has 50 million investors, has finally listed the Bitwise 10 Crypto Index Fund, ticker BITW. This fund holds Polkadot. This means passive flows from massive institutional capital are now touching DOT, whether they realize it or not. When the big money enters, they don't buy the top, they buy these capitulation zones. Then look at the developer activity. Parity released data showing the Polkadot ecosystem has 1.08 times more developers and 1.4 times more commits than Ethereum. Yet, it has far fewer stars or social hype. This confirms exactly what we suspect. The builders are working, but the marketing, the hype machine, has been lacking. But hype follows price, not the other way around. We are also seeing massive strides in utility. DOT liquidity just landed on PancakeSwap via Hyperbridge. This opens up the Binance Smart Chain liquidity to Polkadot. Simultaneously, we are seeing privacy payments going live with Houdini Swap, allowing private USDC and USDT transactions on the network. Speaking of USDC, look at the chart of native USDC on the Polkadot Asset Hub. It is parabolic. Large sums are moving, usage is spiking. This is not a dead network. It is a dormant giant waking up. Finally, we have the tokenomics overhaul. We are approaching the Polkadot halving in March 2026. The supply will shift from infinite to a hard cap of 2.1 billion, and inflation drops significantly. We are less than a few months away from a total change in the monetary policy of this asset.
Now, I want to pull up the 2-week chart. This is where we separate emotion from data. Currently, DOT is trading significantly below the 10, 21, 55, and 100 exponential moving averages. That is the bad news. We are in a confirmed downtrend. However, look at the structure we are trapped in. We have 3 descending trend lines acting as a ceiling. The first comes from the local top in December 2023 at $11.60. We broke this briefly in August, but got rejected at the 236 Fibonacci level and fell back inside. The second trend line is the localized resistance we are testing right now. And the third, the mother of all trend lines, comes from the all-time high of $55 back in October 2021. For Polkadot to reclaim any bullish momentum, it has to cross 2 of these trend lines immediately. We need to see a clean break above $3 to even start talking about a reversal. Now, look at the Heikinashi RSI indicator at the bottom of the chart. I have circled 2 specific areas in white. Look at October 2023. The RSI was smashed down, oversold, and below that orange dashed trend line. When it broke that RSI trend line to the upside, price rallied 200%. Look at where we are today. We are in that exact same position. Oversold, beaten down, coiling below the resistance. If we get a breakout on the RSI here, history suggests the price move will be violent. Volume analysis backs this up. The volume profile visible range shows our point of control is sitting up at $4.20. That is a massive volume shelf. In trading, price acts like a magnet to these high-volume nodes. If we bounce here, $4.20 is the first logical stopping point. Here is my personal strategy. I have been transparent with you guys. I started accumulating heavily at $4. I have been dollar cost averaging this entire way down. I'm not happy about it. Honestly, the performance has been crap, but I'm not capitulating here. My load zone remains strictly between $2 and $3. However, I have a hard line in the sand. My stop loss is set at $1.80. This is just below the launch price on Binance in 2021. If we get a weekly candle close below $1.80, the structure is broken and I'm out of my short-term positions. That would mean we are entering price discovery to the downside, and I'm not sticking around for that. But as long as we hold this zone, my targets remain fixed. I'm looking to take profit at $4, $6, $11, $17, and a final moonbag target at $27. I will be trimming heavily at those first 3 levels to get my principal out and let the rest ride risk-free. So, what's the game plan? It comes down to risk management. The downside risk here is this current level down to $1.80. That is roughly a 15% risk. The upside to the first major resistance at the point of control is over 100%. The risk-to-reward ratio here is asymmetric. The best-case scenario is that the Vanguard listing and the upcoming tokenomics changes act as the catalyst for a squeeze, sending us back to the trendline resistance at $4. The worst-case scenario is a breakdown below $1.80, in which case the thesis is invalid and we cut losses. This is not a trade for the impatient. This is a setup for 2026. I believe the fundamentals of interoperability and the new tokenomics model will eventually be priced in, but the market can stay irrational longer than you can stay solvent, so manage your position sizing carefully. Do not allocate more than you can afford to lose. Polkadot at $2 is a psychological test. It tests your ability to trust data over sentiment. The institutions are positioning themselves. The developers are shipping code. The chart is flashing a reversal signal similar to the last major bottom. If you appreciate this level of transparent analysis, where I show you my losses as well as my wins, make sure to destroy that like button and subscribe with the bell on. I post these updates daily to keep you ahead of the herd. Also, for real-time updates on this trade and to see exactly when I'm buying or selling, join my free Telegram community. The link is pinned in the top comment. I recently covered the Polygon setup, which correlates heavily with what we are seeing here on Polkadot. So if you want to see where the liquidity could be flowing next, click the video appearing on your screen right now. I will see you over there. Thanks for watching till the end, and remember that my videos are never financial advice, only what I'm doing and my honest opinions.